We're looking at these internal level ones now to bounce at, and at that point, like we've just been saying earlier, this could have become bearish on the premise that we were just saying earlier that a bounce at a level 1 would mean that we have to investigate the high degree momentum pictures. If they're all negative, then this is now a bearish market. We shouldn't be doing an entry in it. And you can see that on the 1 hour chart, we're having negative momentum. And on the 30 minutes, we have negative momentum. Let's take a look at the 4 hours. Breaking out into negativity. So what we're really seeing is the head and shoulders and not something to buy into. So we stand out. It's good. If we have, yesterday we're looking at doing half size entry longs or partial size entry longs at 162 levels and 161.20, between 162 and 161.20. If we're there, we get a bounce. We're gonna get a bounce for sure. Hopefully, that is at any one of these areas, and we'll go out at these 162.20 levels, or 161.20 levels, or 161 levels. We're now at 160.70. We close out at break even, or we could be doing another shoulder like 164.50. Depends on the momentum picture. Doesn't look like it's going to improve. But anyway, we're no longer going to be doing longs. We will stand out and resegregate. We have to do a resegregation on all the frames to add up the current wave labels, or cycle labels. But we're going to be doing shorts. We just have to do a segregation to see what's going on. And we'd expect that this is a complete Elliott structure to sell into a right shoulder. Oh, sorry, yes, a right shoulder. All right. So with stand out of longs, if you're not yet long, you're going to have to resegregate that, and tomorrow we'll have to do shorts. If you are long, levels at 162 or 161, we get out on rebound. It really looks like we're going to the neckline at level 5 altogether. This old 5 here, 158 and 158.10 and 160. We're now 160. There could be a bounce at this point. There is a pin candle here, so we could get a bounce at this point. Or if not, we get to bounce at the neckline itself, 157. If you find that the market is moving right away to 158 and 157, you would want to open a hedge to this level 5, which is 158. We'll take a look at how we could open short hedges. We remind ourselves that we're inside of an ending diagonal, and the move can go all the way to 154 and 155. So we don't want the market to surprise us, and we have to be prepared for this. So that sterling appears to be going to 125 and even lower levels. Right, so not to be surprised if we are already long in the first place. We're seeing the double heads here, local double heads in level 4, and we have an extension in level 5. We don't want to get to think that this level 5 is the end of the story. It could become a level 9. So we get a very strong extension, and the market is discounting that everyone is on the long side. And the more people buying, the more this feeds the current bear wave. Something is seriously wrong with sterling itself, fundamentally, and it's very heavily pressured. Therefore, with the sterling yen, once there is that correction, the market shouldn't really rise above that neckline. This is of course a 1, 2, and a 3. We would want to sell 161.78. We would want to sell 162. If we get to that 161.78 and we've not yet closed our longs, we'd close our longs. If we have been longing at 162 and 162.20. Those longs at 161.80. All right, and reverse into shorts. We take the shorts to 155. We just check that on the daily. Take a look again. But if we are going to be hedged, we'll let the shorts run as a hedge to protect our long. We have room to, but it's better to close the longs. We don't want to have a waste of resource at this point. So we close longs at 161.80, 161.60, 162. Reverse to shorts at 161.80 and 162 levels. The stop for the shorts is just at 163. and maybe 163.50, but you need just to be above level 163. So what's going on is a head and shoulders. We still have positive momentum on the daily, but everything else is negative. 4 hours, 1 hour, all other lots are negatives. This is a very volatile issue. We've now corrected 50% of the uptrend. The fibs here are showing the uptrend right from original level 2 all the way to the top of the market. We are at 50%, but we could go back to the neckline. And you even have another neckline lower, so that correction can take you to 155.70, can take you to 152, and over here, of course, is 151.80, can take you in between to 154. So you want to hold until you get to see these levels.